Yes, indeed. I've got Andrew Holland of Avendus Alternate. Andrew, thank you very much for joining in. You've been in India for as long as CNBC-TV18 has existed. What has been your fondest memory? Because you've been with us from day one.
There's so many fond memories, but I mean, obviously, what I see now from where we were back in 2000 is, people just watch CNBC. They've always been watching CNBC, but, the fact is not just about the markets. It's been how you've educated people through having mutual fund managers on the channel and corporates on the channel, and you brought really everything that we were kind of looking at to Main Street, and I think that's been the biggest single factor. I think when I meet investors, they say, Andrew, I see you on CNBC. It's always I see you on CNBC, nowhere else.
Fantastic. So, Andrew, I'm going to put you in the spot here. Whenever you talk to us on CNBC-TV18, you always give us the long-term picture, and everything's fine and rosy in the long term. But I know many, many years back, there was this one instance where you said that, markets are going to fall very sharply on a Monday, that the following Monday, and markets tanked more than 10%. So just talk to us about the near term, because things have been very, very volatile. How do you see the markets now?
Well, I'm not looking for that kind of sharp fall, but I think the 20th of January is a big event with President-elect Trump taking over the U.S. administration, and I think that's an event that we have to be very careful about. So I'm very cautious between now and then. The markets might, in the very short term, because FIIs will go on holiday and domestics will have the full range to have investing. But I think come January, all bets are off, and I think it's going to be a very volatile January ahead of us.
Would you recommend lightening positions if...
So I've said a few times that sometimes the strategy is having cash, just sitting there waiting for some of these events to pass through, and then taking your view that, even if you miss the first 5%, it's okay, right, in a longer bull run. But just to get caught in some volatility which takes markets down, which we've seen recently, right, it's been quite painful for a lot of retail investors. So sometimes just sitting there saying, I can wait.
So what makes you so cautious about Trump 2.0, considering under Trump 1, he's a businessman, and things were fine, markets did well?
See, there's many things about in terms of the tariffs. I think the narrative for India is that we're better off than anyone else, but sometimes it doesn't work out quite the way everyone is saying. So I'm just a bit skeptical that it's going to be exactly as most of the market commentators are saying at the moment. So I just think wait for the event. Wait to see what's going to happen. Some of that narrative will come out beforehand. So I think just being cautious is the right way to be.
And soon after, the 20th of January, will be the Indian budget. And we know things have been slow on the capex front. Corporate spending has also been weak, and therefore growth has been hurting. Q2 earnings were very disappointing. What can we expect on the domestic front?
So I'm not expecting anything from the budget. I know we keep playing it up each year after year, but unless there's big tax cuts, then there's no real reason to get too excited. I think for us at the moment, there's no catalyst for our markets to go higher. Valuations are very high. The economy is slowing quite quickly, and there's no interest rate cut. So I don't think, even with government spending picking up, that multiplier effect will play out so quickly. So I think earnings are going to remain under pressure for the rest of this year.
Okay, thank you, Andrew, very much for joining in. Enjoy the event. With that, it's over to Nigel and Mangalam now.